はい、
Thank you very much for waiting. I think you have the materials and handouts in your hands. So we'd like to commence a fiscal year 2017 full year financial results media conference. Thank you for joining us for this event despite your very busy schedule. Thank you very much. First, regarding the financial results, I will ask our President and CEO, Mr. Saikawa, to give his presentation. Mr. Saikawa, floor is yours. Good afternoon, friends of the media. Thank you very much for joining us for the financial results of Nissan Motor Corporation's. First, I will explain our financial report, and then I will take your questions. So I count on your good support and cooperation. Without further ado, I will go to the fiscal 17 sales performance. In fiscal year 2017, as you can see on the slide, total industry volume rose 1.9% to 93.52 million units globally. Nissan's global sales volume increased 2.6% to 5.77 million units. Our market share increased 0.1% to 6.2%. Moving to our sales performance in the key regions. First, in Japan. Total industry volume rose 2.4% to 5.2 million units. Our sales were impacted by the recall and suspension of production and shipments due to the vehicle inspection issue. But Nissan increased retail sales from the previous year by 4.8% to 584,000 units. As a result, our market share increased to 11.2%. This sales growth was driven by the Note e-Power, Serena e-Power, new Nissan Leaf, and K-Cars Days and Days Rooks. Next, in China, where our sales are calculated on a calendar year basis, as you all know. TIV increased 1.8% over last year, totaling 27.35 million units. Nissan sales increased significantly by 12.2% to 1.52 million units, representing a market share of 5.6%. This was led by strong sales of X-Trail and Sylphy. In small prints, you will note that for the 3-month period to the end of March, our sales maintained this good momentum, outpacing the market with sales of 336,000 units. So we have a very good situation in China. Moving to North America. In the United States, TIV grew steadily until fiscal 2016, but fell 1.0% to 17.31 million units in fiscal 2017. Nissan sales totaled 1.593 million units, up slightly from the previous year, resulting to a market share of 9.2%. The Rogue and Rogue Sport led our sales growth. In Canada, we continued to experience steady growth as unit sales rose 6.6%, equivalent to a market share of 7.2%. In Mexico, TIV decreased 8.9%, and Nissan sales decreased 14.3% to 351,000 units. However, we maintained a high market share of 23.5% and our number one position. Next, in Europe, first including Russia, but first I'll talk about in Europe excluding Russia, Nissan sales fell by 4.6% to 652,000 units, equivalent to a market share of 3.6%. Well, regarding Russia, as you know, the TIV has increased, and we increased our units. But we were not catching up with the pace of TIV growth. So this is Russia. So please go to the next slide. So other markets. There are 4 markets: Asia, Oceania, Latin America, and the Middle East, and others, Africa and others. We have a smooth growth in Latin America. So in Middle East, TIV has decreased, but our decline was smaller than the TIV decrease, so we are doing fairly good. The Asia-Oceania Nissan sales volume decreased. However, we grew market share. In fiscal 2017, I think we will hit the bottom. So in fiscal 18, we will go on an aggressive initiatives. This is the sales performance. So next, so please go to the next slide. So this is a flash report of financial highlights. For the fiscal year, revenue increased and operating profit decreased. So the sales increased to 1.19 trillion. So operating profit and the net profit. As you know, in terms of the net profit, we have the tax reform impact of the United States. So we have a big increase in profit, although the operating profit decreased. So we had a free cash flow at a good amount. Last year, it was a very big amount, but this is very good. And then net cash flow is in excess of 1.7 trillion. So please go to the next page. This is the details of the financial results. The net revenue, 11.9 trillion, and operating profit, 574.8. The ordinary profit, profit before tax, and net income, as you see on this slide. Next is the financial performance analysis.
In terms of variance analysis, this is the reminder against our original guidance. Unfortunately, against the original forecast, we did a downward revision, but 565 billion was the revised guidance. And in Q4, because of the recovery, we ended the fiscal year at slightly better at 574.8 billion. Next, on the next page, this is the variance against the previous term. You see many numbers here. First of all, Calsonic Kansei has been excluded, so making an adjustment in order to do the comparison, 699.7 billion. There has been a slight loss in terms of forex, but there has been a positive impact from cost items at 196 billion. Raw material prices increased, and there's a plus of about 96 billion. And then volume and mix, marketing and selling expenses were quite significant negatives, 105.8 billion and 40.9 billion. So that contributed to the net negative. And R&D continues to grow year on year. There was an increase of R&D by 32.2 billion. Other items, this includes after sales and sales finance. There was a positive impact, but at this level of performance, 675.2 billion. And there were some special items, as I said, the vehicle inspection issue, 90 billion, and U.S. Takata class action settlement, 10 billion, a total of 100 billion. and that was a negative factor. So subtracting the 104 billion, the final operating profit was 574.8 billion. On the next page, this is our performance based upon the midterm management plan. And this is the proportionate consolidation, including China. 13.3 trillion is the net revenue, steady growth. Operating profit, 742.4 billion, with an operating margin of 5.6%. Next, I will give you some business highlights from this page and beyond. As is known, last year was year one of the next midterm management plan, and these were the two missions that we had identified: achieve sustainable growth and leading evolution. These are the two main missions. Next page. To support the growth, new products and new technologies were aggressively introduced. On this slide, you will find the new products and key features that we had introduced in the past year, fiscal year 17. New Nissan Leaf, Serena e-Power. Further, ProPilot was introduced to X-Trail and Rogue. Datsun Cross was a new model. And in the high-growth market of China, a local brand, Venucia, two Venucia brands were introduced in China, a high-growth market. Next, on top of that, new models were also introduced in other areas, other regions. In fiscal year 17, Rogue Sports and Qashqai were introduced respectively in US and Canada. Kicks expanded to China, and pickup truck Navara was introduced in China. Similarly, in this fiscal year, we will be introducing new products. And we will also be introducing aggressively new technology. New Nissan Leaf with a longer range and powerful powertrain will be introduced. So this will be a new version of new Nissan Leaf. And we plan to introduce the new Altima. And in China, Sylphy EV zero emission shall be launched. Further, Qashqai Rogue Sport will be equipped with ProPilot, and new Infiniti XQ50 with ProPilot and variable compression rate VC Turbo will also be offered for this model. And frame-based new SUV Terra will be introduced. And these are the key new launches that are slated for this fiscal year. In addition, Kicks, a global model, will be introduced in the US. These will make significant contributions to our sales. Next. Focusing on growth. These are the pillars of the midterm management plan. We are expecting growth in China. As you know, joint venture midterm plan 111 was announced last year. More than 1 million units increase is one of the targets. And in fiscal year 17, 1.5 million was surpassed. So we're progressing steadily. We are expecting an 11% increase in fiscal year 18 to 1.69 million. And another announcement that we had announced as growth pillar of the midterm management plan is leveraging on Nissan's potential against our peers. We need to catch up by achieving these pillars. Pick up truck and frameless SUVs. These are two areas of focus. As you know, last fiscal year, 529,000 units were achieved. The plan for this year is 600,000. So we are to double the growth basis, and towards the target of 790,000 units, progress is being made steadily. Next, in addition to growth, let us now focus on Nissan Intelligent Mobility and our evolution. This page is on electrification. There has been quite big highlights. New Nissan Leaf was launched in fiscal year 17 for global sales. On cumulative basis, we've already crossed the mark of 320,000. In 6 months, already 32,000 units were sold. So growth numbers, sales numbers are growing quite steadily. There's Note e-Power and Serena e-Power already launched in Japan, in addition to the new Nissan Leaf. So much progress in electrification. Now, EV sales in China. So far, we've not been communicating in detail, but DFL, our joint venture partner, our joint venture does EV sales. 23,000 units were sold in fiscal year 17, which is threefold of the results of the previous term. And as indicated at the bottom, the new version of the Nissan Leaf will be launched during the course of this year, and at the same time, Sylphy Zero Emission will be launched in China. So we will be doubling sales in China. Next, autonomous drive technology as another element of Nissan Intelligent Mobility. And sanguine growth is being seen in this area. New Rogue and new Leaf and X-Trail Rogue with Pro Pilot has been introduced. This has been newly offered in the US and European markets, and as a result, already there are 120,000 units on the road with Pro Pilot, and new Altima, Qashqai Rogue Sport, as well as new Infiniti QX50 will be launched during the course of this fiscal year. Next, new mobility services. As is known, Easy Ride is being demonstrated in Japan along with our partner DNA, and this was a major highlight of the previous term in terms of a field operation test. Nissan e-sharing service is being expanded in Japan, and further, in this fiscal year, there are currently 30 bases, and the number of bases will be increased to 500 from 30 locations on the global front. As you know, in China, a new car sharing program using EVs will be done with Didi, and MOU has been signed, and we've begun to study this possibility with Didi. Now, announcements have not yet been made, but we intend to extend our partnership in the current fiscal year. Next, lastly, alliance. This is already well known, and as we announced this last year, since April of this year, the beginning of this fiscal year, single leader convergence scale and scope will be expanded, and with Mitsubishi as well, already collaboration is being reinforced, and alliance is accelerating. Those are the business highlights of the previous term. Next, let me now come to the outlook for fiscal year 18. Fiscal year 18 sales outlook. global TIV is expected to increase on global basis by 2% to 95.4 million units. And our sales is expected to grow by 2.7% to reach 5,925,000. With global growth of 1.2% or 2%, our company's number of units is expected to increase by 2.7% to 5.925 million. US and Europe will probably experience decline in the number of units, but that will be offset by growth in China, Japan, ASEAN, and Latin America. Next, against the sales plan, we've come up with the revenue outlook, which has been notified to the Tokyo Stock Exchange. And this is based upon the equity method basis, and China is not included in the revenue or operating profit. Retail volume 5.925, net revenue 12 trillion, operating profit 540 billion, margin 4.5%, and net income 500 billion. This is the basis of the calculation. 105 yen to the dollar is the forex rate, and 130 yen to the euro are the applied forex rate. So if we take a look at the variance, I mentioned the special items for the past fiscal year, which was the vehicle inspection issue in Japan and class action in the United States. Those factors will be non-existent, so that would have an impact of 100 billion. And then revenue and cost performance, 144 billion yen of positive impact will be caused. Euro 6D introduction will lead to cost increase, which is negative. And as you know, clutch test in the US, this will have to be done in and after 2019, which will amount to about 60 billion or slightly over. But that included improvement of 140 billion. R&D investment, we will aggressively increase R&D investment, which will increase by 44 billion, and also raw materials will have a negative impact because of its increase, which is expected to be around 80 billion. Others, negative impact of 20 billion. So on performance basis, against 575, 675 billion, 100 billion improvement is estimated, but 100 yen to the dollar and other currencies will have negative impact. So forex included, forex negative impact is estimated at 135 billion, which will wash out the operating profit. So unfortunately, the expected operating profit is 540 billion, as was reported to the Tokyo Stock Exchange. Now, in terms of shareholder return, at the previous session, I told you that the full year dividend will be 53 yen for fiscal year 17, and that proposal has been made. For this current year, fiscal year 18, we shall continue to pay out to our shareholders. And although the growth rate will decelerate because of profit levels, there will be an increase still to 57 yen for full year basis as fiscal 18 full year dividend. That concludes my presentation, and I'm ready to take your questions. Thank you.
Thank you very much. We will now have a discussion. If you have a question, please use the microphone. So please speak into the microphone. Staff will bring the microphone. The questions are limited to 2 questions per person. Do you have a question? Please raise your hand. Yes? The person in the middle? Toyo Keizai Kishimoto is my name. Thank you very much for this occasion. First is a question regarding your U.S. business. The TIV in the United States has hit the ceiling, I guess. In this situation last year, your company restrained incentives, and you have revised and changed inventories and so forth. There were two less business days. Maybe it may have impacted, but I think there was a decrease of 30% overall. So going forward, what is your policy on incentives? What will be the level of incentives in the United States? The units versus a profit? How do you see the compatibility between the two? Can you talk about your thinking? That's the first point. The second point, sorry to move away from the financial results. This is a question regarding alliance with Renault. I have a question regarding alliance. The other day, Mr. Carlos Ghosn, chairman, responded in an interview in Nihon Keizai Shimbun, and he expressed the intention to review the capital mix or proportion with Renault. I think sustainability of alliance is one of your challenges, but going forward, what is the future picture of alliance? What should be the picture? As the CEO of Nissan, what is your idea? Can you talk about it? These are the 2 questions. Thank you very much. I think your questions were very wide-ranging. First is regarding U.S. business. The last point, the sales volume increase versus profitability. How do we strike a proper balance between the two? I think that was the last point of your question in the first question. In the medium term, of course, we want to aim at the further growth in the U.S. market, but in the short term, this fiscal year, or including this fiscal year, until next fiscal year, profitability has to be improved. That is our largest salient point. There is no doubt about that. I want to be very clear on that. Of course, recklessly, we shall not decrease the units, but profitability recovery is the largest point for us. You touched upon incentives. What we are trying to gain at is to enhance the quality of our sales. To that end, we have to have various measures. One of them, naturally, would be to increase the incentives, thereby units would be increased, and more than necessary, it may worsen the profitability. That's something that we have to avoid. Last year, mid-last year, we began discussing that. Change of pace. The work style has to be changed. So we introduced various measures, among them, in addition to incentives. Fleet volume, increasing that, well, rather than increasing that, pure retail is something to be focused on, and we must increase the pure retail customers. We are envisioning that. In this context, we have introduced various measures. We will introduce various measures. At the end of the term, accounting closing, so April, more than necessary, maybe we reduced the number of units, more than necessary. But what we estimate is, as I discussed now, there will be slight decrease, slight decline. That is the core piece of our strategy. Regarding the U.S. today, we have our CPO, MC Chairman, Jose Munoz, and new MC Chairman from January, Denny. Is Denny here? Is Denny here? Yeah, I find him. So I'd like to ask these 2 gentlemen to supplement what I said. Jose, please.
Thank you, Saikawa-san. So as you highlighted, the strategy for the US is to optimize the quality of sales. There is a difficult balance to make, but that's a decision that we've taken, and we are committed to it. It means more retail sales versus fleet sales, which should improve the residual value. And it means also to try to adjust better to the balance between trucks and cars. There is still a 9 points difference between the market and Nissan in terms of the distribution of sales between trucks and cars. And this is something that we are planning moving forward. Obviously, the other key activity to be able to improve the retail sales is to attract more customers, so pull activities through FMI activities versus VME. And also, in particular, in fiscal year 18, we have two important events, which are the launch of the all-new Kicks, which is going to be launched at the end of this month, and also the all-new Altima, which is going to have the new all-wheel drive capability, which is going to allow us to have better, higher quality, higher mix of the product. Also, we will complement with the full year sales of all versions of Titan, which is the first time, also full year sales of the Rogue Sport. So we're confident this is the right strategy. We have a lot of activities together with the dealer network to be able to optimize and focus on the improvement in the margin without losing volume or losing as least as possible.
Thank you. ご紹介も兼ねてですね、
Thank you very much. I have conveyed the name, but I'd like to make the introduction from January, from the month of January, in place of Jose Munoz, USMC chairman. Dennis Roth is with us. So he will talk to you. Denny, please.
Hello, everyone. After the remark by Jose Munoz, I would say that nothing much more to add. I think that it was in this contraction year that was 2017, Nissan Group in the USA has grown in terms of market share, and this market will continue contracting in the year 2018. Unfortunately, that's our prospect, and we will also continue growing in terms of market share. And as was said, we will really concentrate on the new model and the pure retail and clean the channel as much as we can in order to prepare the future and the other year going forward. Thank you very much.
Hi. Thank you very much.
Now I discussed the United States. There was another question, that is your question about alliance. Well, to be more exact, Chairman Gon's interview was quoted in your question. My understanding is as follows. The biggest homework for us is to deal with alliance over generations, including Mr. Gon, from the current leader to the next leaders. Even leadership may change, alliance must be maintained, and we must create the mechanism or structure to enable that. The capital structure, capital proportion distribution is included in the discussion, in the scope of our discussion. There is no difference in the scope of our examination or study. As you know, the current structure of alliance is such that, in principle, each country will maintain autonomy, and the autonomy will be respected. And but the operation would be integrated where the efficiency would be maximized. That is what we aim at. So that is the assumption based upon which Mitsubishi joined our alliance. So the salient point about this is this. Autonomy is maintained. Respective companies will exist with autonomy. Basically, that is the source of growth energy. Each company will grow. How do they grow? That is to the maximum extent given to the company. Given the portfolio, history, and footprint, the greatest strategy would be formed and implemented. In that process, alliance efficiency would be maximized, and the maximization of alliance would be pursued by all the parties. So against the competitors, we will have the scale merit, economy of scale, and at the same time, each company's growth energy would be inherently kept. That is the most salient point in the alliance. In what way are we work in the current business, and how do we transfer this to the next generation? How can we carry on this to the next generation? That is the greatest homework for us. That is my recognition. If we just hand it over to the next generation as it is, that's possible. But in doing so, Mr. Gon or the next generation Gon has to be there. Otherwise, the current mode of work would not be kept. So with the structure in mind, we have to ensure something which will not necessitate the presence of a new Mr. Gon in the next generation. It doesn't happen in 1 month or 2 months. Before that time comes, we have to prepare ourselves to that eventuality. That is the homework we are given. That is my thinking. I was aware of that for some time since past, but from this fiscal year and onward, to the extent possible, as soon as possible, we want to do it, but it's not a matter of 1 or 2 months. But we'd like to study concretely so that we can carry on to the next generations. That is my idea. Thank you very much.
一番後ろの人。
Thank you. The person at the back, please.
日本放送畑中と申します。
Hatanaka of Nippon Broadcasting, thank you for giving us this opportunity. New mobility service was one of the missions that you have defined. Once in a century transformation is what is being talked about in the auto sector. Car sharing service and autonomous drive and new type of services shall emerge. But do you think that these new services will become a new source of revenue? Today, your business is about selling cars to gain revenue, but what change do you expect? How will these technologies impact the business structure or business model? It may be premature, but I'd also appreciate some quantitative information. Sorry, you said quantitative. That's very, very difficult. We can't put it into numbers. We come up with certain forecasts, and then we also have some expectations that we put into number that we can't talk to you. We don't know whether we're right or not. Things may change. That's why they are calling this a once-in-a-century transformation. This is my plan. This is the number we're targeting. Then that means that it's not a once-in-a-century transformation. But let's put that aside and then think about the highlights of our discussions at the moment. We are a car manufacturer. So when we think about our business, we deliver cars, we deliver vehicles, and then we make money. How much by delivering vehicles? Can we ensure profit by delivering vehicles? And then what do we do in terms of mobility services? And there are a few business models that we are contemplating. New car to be supplied to for new mobility services. That's one source of profit because this business can't be loss-making, so it has to be a profit source. And then there's also a separate profit source of new mobility service, and the nature of the business is different there. So gross profit from sales of cars, we don't stick to just that business model. And futuristically, mobility service may grow to become quite a sizable business. So we want to obtain more clues on what size that kind of profit would become. We are a car manufacturer, and we don't have much expertise. We do have customer data as assets. But to tell you the truth, we don't have such high level of expertise there. But if we look at the hardware, electrification or EVs and autonomous drive, by evolving further evolution of the program, this could be integrated to the business model. So with the evolution of the cars, our strength will be reinforced. So by partnering up with entities that have the expertise in such areas, we want to go into this area. I cannot make a commitment by the next fiscal year. I hope that we can give you some milestones for what we plan to do in the first phase. Oh, sorry, by the end of this fiscal year. We hope to give you some more guidance. Thank you very much.
Yeah, the person at the front.
Automotive news. I'm just wondering if you can give us a little more detail about the situation in North America. At your last earnings press conference, you mentioned, as you did today, that the strategy is quality sales and that you will reel back fleet sales and incentives. And then in April, we saw a dramatic drop in sales, and maybe you say it's a little bit too much of a drop in sales. Can you tell us about, maybe give us some figures, or maybe have some of your executives give us some figures about how many fleet sales have been dropped down, how incentive spending has changed, and when you say sales dropped too much in April, why is that, and how long do you think it'll take before profitability can be restored?
はい、OK, has これ英語で問いな。Has this is the question is relevant, and I will invite the Jose or Denny again. But the point is we are now changing, not entirely, but a bit the strategy, and of course we need to work out with our partner dealers. So there's the moment that we need to align with ourselves to the dealers. So there has been some sort of the period we may anticipate some sort of performance the deterioration, which I anticipated in April anyway. But the associated with the TIV drop, it is a bit too much. Of course we cannot anticipate everything, but now it's recovering. All in all, as a result, I don't think the great result in the specifically for this fiscal year Q1. Q1 is more for the changing over many things, and still we need to reduce the dealer side inventory, while we should not put too much the inefficiency again for the model year change, which means Q1 is the most important period that we should discipline that practice. So the Q2 and Q3, Q4, when our portfolio is getting better with new Altima and new Kicks, so then a new Leaf, it will be more, how to say, normalized or better aligned that we like to do. So this is where we are and where we'll be, and maybe more. We cannot say too much about the numerical number, but if Jose or Denny would like to add something, please.
Thank you, Hans, for the question. So I think obviously the April results are not satisfactory. I don't think we found the right balance there, but the direction is clear, as mentioned. We want to continue to grow, but focus on retail versus fleet mainly, and capitalize on the new launches that we have this year. So we are planning to grow share, Denis just mentioned, marginally as a total, focusing on growth of share on retail, which is the one that matters most. This is a good equation for the dealers, because for the dealers it's going to imply an increase in volume. So whilst in the surface we will see maybe marginal increase, or even depending on the market, increase in market share, but maybe volume not increase, as we showed in the numbers, for the dealers is going to represent an increase. And this is the right year to do it. We already ended this fiscal year 17 with lower level inventory significantly than a year ago for the dealers, which is welcome. We're going to steadily, as Saikawa-san mentioned, continue to reduce up to right level. So we will see the end of Q1 a slight reduction versus the end of fiscal year 17 in terms of dealer inventory, which, by the way, is going to have a very good side effect, which is the optimization of the model year, new model year introduction in the market. Also, as one side benefit of the fact that the market is a little bit lower, our plant utilization is a little bit lower as well, and this allows us to be able to do a much more efficient change between old model year and a new model year. So, which means we will decrease the level of inventory of all model year car, and will be able to step up, increasing production as we introduce the new model year. To give you also some additional element, we think we're going to reduce the fleet percentage maybe 4 to 5 points in the fiscal year, but again, with a full fiscal year focusing still on net growth of share and a clear increase of retail share and retail sales for the dealers. Again, capitalizing new models. Kicks we launch at the end of this month, and then we have after summer, by the end of August, September, the new Altima. So we've made a plan. I think we are very confident in the plan. Denis is being communicating this plan to the dealers in different grassroots meetings, and will continue to do so. Now we need to stick to the plan, do it better. We have already seen in the month of May an improvement, a significant improvement versus the month of April. I think we are trying to find the optimal position to operate in this market.
Thank you, Jose. So maybe I think that he explained everything. Okay. ちょっと日本語に戻
Well, I will go back to Japanese about this particular point. To Hans's question, a reply was given. As I said earlier on, this fiscal year, sales and profit numbers, you have the numbers. As you can see those numbers, the profit was reduced. But we will just we will swallow that, and we will improve the profitability in the United States. In the latter part of the year, it will be better. In the Q1, we will not go out of our way, and we will just revise, we will rebuild our strength, and the profitability itself is lackluster, but towards the latter half of the year, we will look for the better numbers. Thank you. Takita from Television Tokyo. I have two questions. The first question, so-called the inspection problem, car problem. Compared with the initial estimation, I think it was a big negative factor suppressing the profit revenue by 10%. Have you all removed the impact from the completed car problem, the reputation of brands as well as the dealers' capability included? That's my first question. The second question, Toyo Keizai colleague asked a similar question. Alliance. I have a question regarding Alliance. Fundamentally, many people have doubts about Alliance. Nissan Motor Company has better profitability. Profit gaining power is stronger in Nissan than Renault. However, the capital mix, Renault has more stake in Nissan. So that is a distorted situation. This is a distortion. So from that distortion, I think there is a discussion of wanting to give a fresh look at the capital mix. So I want to re-ask the similar question. On this point, in France, French government has an equity stake in Renault, and the French government may want to increase its control over Renault. Then the current distortion would be enlarged and strengthened in some situations. Can you talk about your idea about that? Thank you. Regarding the completed car inspection problem, as was introduced, the sales volume, looking at the number, against the original estimation, against fiscal 16, fiscal 17, consequently, the sales increased. But it's not because of plan. Last year, in the first half of last year, until we launched a new Leaf, we had a very good record, very good performance at that time. We thought that we can increase the sales. The customers supported us, so we anticipated the healthy and strong growth of sales. But that point was impacted because of this problem. Shipment was suspended, and sales slowed down somewhat. So we were carrying this handicap. But talking about the sales and talking about the evaluation by the customers, as I said, our objective number for this fiscal year is in excess of the planned number of last year. So we have the number where we can expect the customers to buy. So it took a little more time, but I think sales have come back. Now, monozukuri, the manufacturing situation at the plant. So we will inspect the cars, and now things have normalized at long last. But because of this situation, to a certain extent, money was spent, and plant operation is rectified. So there is a certain increase of cost. It's a necessary cost increase. So it is incorporated into this year's budget. That's the current situation. Therefore, so it took a little time, more time than we anticipated, but we are now back to the last year's situation. Going forward, with the customers, they will give us higher marks, and we want to increase our sales and our activities. I think we are now entering into the entry point for the recovery. Now, your second part of the question is regarding alliance. I think I said this before. I'm not going to say anything new. I think I always say 2 points. The capital mix balance of alliance, when we do the normal business, it doesn't come up as a problem. I discuss with Renault, with Nissan, with Mitsubishi, we discuss business matters. I have lots of capital and you don't have capital, so hear me out. Between Nissan and Mitsubishi, Nissan is a shareholder of Mitsubishi, so let us do this and that. We don't say that. We don't ever say that. It's a fair relationship. So how about doing this? How about you doing this? How about us doing it? It's a fair discussion. More than you may think, it's very fair. It is unrelated with the day-to-day business operation, the capital mix, equity mix. So it is not only a matter of principle, it's the reality. I want you to understand. It's not that we have battle every day regarding a capital or equity stake, but considering the future, there will be various risks that we have to prepare so that people can work having a peace of mind. We have to create an environment. So in terms of environment, maybe there is a slight imbalance, as you implied. You asked this question because 2 years ago, Florence law was enacted in France 2 years ago. And I think I spoke on that occasion that what is very important in this regard is that so is a cradle of doing business. What is important is having a proper balance. So at that time, I said that Nissan can have a voting rights. I think I said that at that time. So striking proper balance is very good in order to enable more stable cradle in the future. But talking about extreme, 2 years ago, for example, Mr. Gon and I were given homeworks. So homeworks, before we carry over the business to next generations, we have to work on our homework assignments. So we always think about the importance of the homeworks. For Mr. Gon, for me, it's not anything new. It's not anything new. But we have to come up with the results by some time. And the equity structure change would be is possible to be included in the work on homeworks. I still have more hands, but this is going to be the last question in the interest of time. Nakajima from Kyodo News Agency. So equity change with Renault, I have a question. You may have a review of the equity structure. There are many ways. Mr. Saikawa said that autonomy is maintained for respective countries. It is a source of growth energy. Means that Nissan and Renault would merge into one company. It's not desirable? Is that what you're saying? But in order to simplify the equity structure, holding company could be created out of two companies. The other day, overseas report said that Renault and Nissan are negotiating for merger. Can you certify the factuality of that? Now, the report, there is no fact to that report. But as I said earlier on, in the future, what are we going to do in order to carry over the business to the next generation? What can we do? This is not something that we are beginning yesterday. It's a long-lasting homework. It's a fact. So we have to give answer to the homework and assignments, but there is no fact to the effect that we are negotiating any mergers. Your first part of your question about that. There are many ways of doing that. I do admit that. But this answer that we seek, the current autonomy will be maintained in the final analysis in the way that we have now. It will be ensured. But even in the future, leadership may change, but the same kind of work would be continued in an environment. So the question is, how can we ensure that environment? It's nothing more, nothing less. If there is no better answer, then the current situation will continue. Regarding, so if a merger, then autonomy of respective companies will not be maintained. Am I correct in interpreting your answer? I don't want to go into specific or detailed discussion. I don't think it is appropriate to discuss that at this moment in time. What is important is that alliance is functioning with autonomy and efficiency. So are we sacrificing those two for the future modality? No, we are not considering that. Time is up. So with this, we'd like to end the press conference on the occasion of the financial results. Thank you very much, ladies and gentlemen.